Good afternoon, everybody, and welcome to Pension Awareness Month. My name is Catherine Murray, the Training and Engagement Manager from MyCSP. I'm joined today by Liliana Gonzalez and Michelle Storer from the MyCSP training team as we take you through our Arriving at Retirement session. So if you've joined us for other sessions earlier in Pension Awareness Month, thank you so much for being with us on this journey. We started at the very beginning, focus on people first joining the pension scheme, then those somewhere in the middle who maybe aren't close to retirement yet, but are starting to think more about their pension, and then journeying towards retirement. So we're finishing that journey, focusing on retirement and the key things that you need to know today. Like all of the other Pension Awareness Month sessions, today's session is being recorded, so you will be able to watch it back later on the Civil Service Pension Scheme website, on the dedicated Pension Awareness Month pages if you would like to. And as with all of our other sessions, we will have time for your questions today as well, so please feel free to submit any questions that you do have, and we'll try and get through as many of those as we possibly can, focusing on those that have been most upvoted by you, the audience, today. So to get us underway with today's session, I'm going to pass you over to Liliana, who's going to take us through some of the key facts and figures that we need to know when it comes to retirement. So over to you, Liliana.
Thank you and welcome everyone. We have now arrived at retirement. So what we're going to cover in this session, we're going to talk about preparing yourself for retirement. We'll talk about what you need to know, the types of retirement and the application process. So we're going to go over the different types of retirement that are on offer and what you need to do once you have decided you want to go. We'll also talk about the remedy. I'm sure it's a big hot topic for a lot of you in the room. So we're going to go over the remedy and what that means for you. And then we'll talk about post-retirement and where you can find more information and support as well. So of course, preparing for your retirement arrival, making the decision to retire isn't usually one that happens overnight. Of course, this is something that we've been planning for since we've started work, but you'd want to consider all of the things that go into retirement, not just your income, but your family and friends, the community, leisure, and travel. It's just starting to think about what you want your retirement to look like. And of course, one of the biggest points of retirement is going to be your income. So you want to think about what income you're going to need to lead the life in retirement that you want, and how to get there. So of course, we're going to talk about the pensions and how that all works in your retirement. But of course, you want to consider your family and friends and the other things that are important to you when you're considering leaving. So of course, in terms of what income you're going to need, it's going to depend on your individual circumstances. So everybody needs housing, food, potentially some transport and leisure activity. So it's just starting to get in to think about, do you have a mortgage payment? Do you have a rental payment? Do you have a car note? What bills you're going to have to pay in retirement, as well as your essentials like your food, your clothing, and of course, any holidays and leisure. So everybody's circumstances are different. The retirement living standards has some facts and figures to kind of look at to give you a good starting point. But of course, everyone's circumstances are personal to them. So it's just thinking about what your outgoings are going to be in retirement and what income you have to kind of get there. So just thinking about those. And of course, the earlier you think about your income, the better it will be. Now, your benefit statements are going to be one of your most effective tools for your pension planning, and your benefit statements show your position at the 31st of March every year. So that's going to tell you what pension you've accrued. That includes any previous benefits you have, whether they be in classic, premium, Classic Plus or New Voss, as well as your Alpha pension. So the benefit statements are like one of your most effective tools. Again, it's going to show you at the 31st of March everything you have so far, so you're able to effectively plan. It also includes your lump sum option and projected family benefits as well. So again, all of that information is an easy to read place, and there's lots of notes around it as well. So if you're not sure what you're looking at, just read through your benefit statements. All of the information that you need to understand your benefit statements are there, of course. And again, that's going to enable you to project your benefits as well. So as long as your benefit statements are correct, the projections that you'll use on the modeler will be correct as well. And that retirement modeler, again, is a really good, useful tool. You'll be able to see what your benefits look like in the future. So the modeler is automatically input with the benefits that you have at the moment, as well as your current pay. So it makes the projections on the assumption that you're going to earn the amount of money that's in the calculator for that period of time. So it's an assumption. Of course, if your pay changes in the future, your projections will change. But again, it's as useful, and it works based on the information that you have in there. So again, a really good, useful tool. And something to bear in mind, that if you're looking to take a lump sum or looking to leave early, the retirement modeler takes those factors into consideration when giving you your estimation. So you'll be able to see what your benefits will look like quite accurately based on your circumstances at this point in time. So the modeler, again, this is what it looks like. This is a snapshot of the actual modeler, and this is a member looking to leave at 65 with the maximum cash. So again, that estimated total annual pension that you see is inclusive of any reduction factors to your pension for leaving early, as well as taking any cash. So again, those sliding scales you can play around with, so you can leave earlier, leave later, take no lump sum, anywhere up to the maximum cash, and those outputs are given according to the circumstances that you've put in there. So again, it's a nice tool, it's a fun tool to play around with, and you can see what different outputs you get based on the information you input as well. Now, of course, when you want to retire, you do have a few options, so we're going to go over each. So we'll talk about age retirement, early, partial, and late retirement. Those are the four types of retirement that are on offer. So firstly, age retirement just means you've come to the point that you can take your benefits at their full value. So that's 60 for Classic, Premium, and Classic Plus. Nuvos is 65, and Alpha is your state pension age, whatever that is, between 65 and 68 currently. But again, that's the age that you can take your benefits at their full value. So, of course, people leave later, which we'll talk about in just a moment. People can choose to leave early. But again, this is the point where you can claim the pension at their full value. And each scheme is treated individually. Your classic pension, premium, classic plus pension is still payable from 60. Nuvos is 65. Alpha is state pension age. So they are separate. They have their ages attached to them as well. Now, of course, early retirement, you're able to go early. If you want to claim your pension early, there will be a reduction based on the assumption it's probably going to be paid for a longer period of time. So think about other income you may have to boost your finances, thinking about any other retirement income you have, because if you go early, the reduction to your pension is permanent. Now, bearing in mind, pensions and payment do have the cost of living adjustments applied to them, but that's to make sure the pension retains its value. So it's just thinking about, if you do want to go early, the benefits are reduced, and you want to be happy with that income going forward. So again, really important to think about what income you need and what your outgoings are going to be, and making sure that you're okay with that pension going forward. Now, the reduction factors, again, are taken into consideration on the modeler, so I can't stress enough, if you are thinking of leaving early, use that modeler, and it gives you those projections based on going early as well. Now, partial retirement. This is a very popular option for those who wish to continue working but take some or all of their pension. Now, partial retirement, you do have to get your employer's agreement first, because to qualify, you have to drop your earnings by at least 20%, which means dropping at least 20% of your hours or taking a job that's paid 20% less. However that's called a job reshape. So you and your employer will confirm what that job reshape looks like, and your employer would submit the partial application on your behalf if everything's to go ahead. But again, you're able to take some or all of your pension, carry on working, and if you do carry on working, you still would gain a pension, and you would get that in the Alpha pension scheme. As long as you're still active, contributing, you'll still build up some pension to take when you fully retire as well. So lots of information on the Civil Service Pension website. There's a partial retirement guide as well as an abatement guide, because abatement is a big hot topic that you want to make sure you understand if you are considering partial retirement. So again, lots of information on the website, and that will be a really good place to start if you are considering partial. But the last option you have is late retirement. So this means you're leaving after 60 in Classic, Premium, or Classic Plus, after 65 for Nuvos, or after your state pension age for Alpha. Now, late retirement, there's no addition to the final salary pensions, because your service is frozen now that you're an alpha, but your pay is still linked to your last day of service. So if you've got a classic, premium, classic plus pension from active service, again, we won't know what that full value will be until you actually leave because of what's called the final salary link. So while your service is frozen from the time that you've gone into alpha, your pay is not, and your pay is only assessed when you actually leave service. Where NUVOS and Alpha, there is an addition that's added on top of the pension if you take it 1 or more months late. So again, 1 or more months late from 65 for NUVOS or state pension age for Alpha. So just bearing that in mind, there is that addition to the career average pensions, but no addition for final salary. So it's only paid when you actually claim the pension. The only caveat with that is if anybody has a deferred final salary pension, that is payable from 60. But if you have moved into alpha from a final salary scheme, again, that final salary link is still retained. So what process you want to apply when you want to retire? Of course, firstly, choose your last day of service. So what day you want to go, and you can go anytime during the year, but you want to approach your employer and let them know of your intent to retire and what day you're looking to go as well. We say provide 4 months notice because that gives us time to make sure that everything's in order, that we have all of the information we need to give you your retirement quotation with all of your options. And it gives us time if we do need to go to your employer to get any further information, we can do that in good time for you to get your pension paid on time as well. So we say 4 months notice. Your employer may need more notice than that. So super important to think about when you want to go and engage with your employer sooner rather than later, just so they know of your intent to retire and everyone's on the same page and knows what to expect. But once we've received the request for services, as it's called, once we've received the request to proceed with your retirement, we'll review the documents. You'll review your documents, you'll choose your options once you've received your quotation, and then sign and return what's called the personal details form. So your quotation will be sent to you about 2 months prior to your last day of service. Have a look, make sure you're happy with your options, sign the documents, send them back to us, and then we'll put your retirement pension into payment. So when you receive your paperwork, again, it's going to have all of the pension you've accrued up to your last day of service. So that's inclusive of any pensions you have from the legacy scheme. So whether that be classic, premium, classic plus NUVOS, you'll get your pension from that scheme, all of the information pertaining to that, including your lump sum options, etc. But you'll also have your alpha benefits as well. So everything will be in one pack, but it's up to you to decide if you want to take one scheme at a time or if you want to take everything at once, because it's a common misconception. Some people think they have to take everything at once, have to take alpha with the classic, for example. That's not the case. You are able to take one scheme at a time if you wish. So again, whatever you choose, you want to sign the documents, pick your lump sum if applicable, fill in the details for that pension. And of course, once you've sent them over to us, we'll get those into payment. There's also information on voluntary deductions. So you are able to put money towards a finite number of things like Benendin, the civil service gyms, for example. So you are able to do those voluntary deductions from your pension, and you can let us know if you want to do any of that, and we will abide by that as well. But there we go. So I hope that's helped. And Michelle is going to be talking about the remedy next. But for now, I'll hand it back to Catherine.
Thanks, Lil. That was great. Really useful to have that walkthrough of the different options when retirement does come around. Hopefully that was useful and gave you some information to aid you with your planning if retirement is on the horizon. Now, just a reminder, we do have other sessions that are available. So, of course, all of the other Pension Awareness Month sessions have been recorded and are all available on the dedicated Pension Awareness Month pages of the scheme website. We also have things like our Pension Power sessions, which we run online every single weekday that you can sign up to attend at a time that's convenient to you. And they are in much smaller groups. So you do have more opportunity to ask questions of the trainer delivering your session. We also have things like our pre-retirement course that are also available. Now, there is a charge attached to those sessions. So if you are interested in attending one of those, you'd need to speak to your employer in the first instance and see if they're willing to allow you to attend one of those sessions. But they are available to give you further information and guide you on the way if you would like to. So I'll pass you over to Michelle now, who's going to continue us on our journey and have a look at the 2015 remedy and also the support that's available to you after you retire. So over to you now, please, Michelle.
Good afternoon, everyone. So just building on exactly what Liliana's taken you through, and this remedy conversation, we talk more about it in the preparing for retirement session, so you can look back at those from last week where we're going through some detailed calcs. But of course, now we're looking at you arriving at retirement. The 2015 remedy, just to give you a brief overview, that is looking at the period of time from the 1st of April 2015 to the 31st of March 2022. And that's where some people were moved over into alpha, some people didn't, and some people tapered into alpha. So the McLeod judgment was looking at that period and saying that it was classed as age discrimination. So the scheme is giving you options around what you want to do for that 7-year period of time and which scheme you would like your benefits paid from. So anyone retiring after the 30th of September 23 will be given their remedy options in their quotation. So this is called the deferred choice underpin. So what that means is that you're being given the choice at retirement around how you would like that to affect your benefits at that point. So there was some conversations around being asked to make that choice like within the next month, for example. You'll only be asked to make that choice when it comes to retirement. So it'll be classed down as option A and option B. So let's look at that in a little bit more detail. So option A means that all service up to and including the 31st of March 22 will be calculated on your previous scheme. So that'll be Classic, Classic Plus, Premium or Nuvos. As part of the 2015 remedy, everyone was moved into Alpha from the 1st of April 22. So you will accrue benefits in that scheme from that point forward. But option A will allow you to have all of your service up until the 31st of March 22 under your original scheme, and you will see those figures there so you can choose and have a look at that. Option B means that all service up to and including the 31st of March 2015 will be calculated on your previous scheme. So this is where you would then be choosing to be in the Alpha scheme from the 1st of April 2015 up until your last day of service. So you will have those figures there to be able to determine yourself which is the best option for you. So we have been asked, like, are we going to be given financial advice around that time? Well, you will clearly be able to see from those figures, the information available to you, what your best choice is. So Liliana mentioned this before, so there are some sort of common misunderstandings around Alpha and if people need to take all of their pension benefits at the same time. So you can choose to take your civil service benefits, so the principal civil service pension scheme, and what we mean by that is Classic, Premium, Classic Plus or Nuvos. So you can just opt to take those at your retirement date. You can opt to take Alpha only, or you can opt to take both at the same time. So another common misunderstanding that we hear is that you're only able to take Alpha at the state pension age, which is the scheme's normal pension age. You can, of course, take that earlier. And as Liliana was showing you just a few moments ago, that would class as early retirement from that scheme. You don't have to take your main scheme benefits at age 60, as Liliana was talking about before. You can take them later and that would be classed as late retirement. So the choice comes down to you around what you want to have payable and when you want that to be paid to you. So if you don't choose to take your Alpha pension when you come to retire, so if you decide to fully retire, then your Alpha benefits will be preserved. So I see from the questions that we've had some of those asked already. So if you were to fully leave, that would mean that you were no longer in the scheme, earning a salary and paying contributions to full retirement. That would mean that if you didn't take your Alpha, it would carry on going up by inflation each year, but it won't go up by the 2.32% accrual any further because you wouldn't be earning a salary and therefore having contributions deducted. So if that would be your situation, then you can contact my CSP when you're ready to fully retire, and then you can have that paid to you. Of course, on partial retirement, where you're drawing some or all of your civil service benefits, you would carry on in the scheme, building up Alpha based on the salary that you're earning from that point forward. And then you can decide at a later date when you want to take those benefits, and you would just need to contact your employer to start that process. So on partial retirement, the communication is just slightly different because you would be classed as still employed, but also earning a pension. So you would still get annual benefit statements based on the pension that you built up from when you took partial retirement. So as I said a moment ago, you carry on building up another alpha pension or adding on top of it if you didn't take it at retirement, and that would still be going up. So you therefore receive your annual statements that are calculated at the 31st of March every year. But because you're also in receipt of a pension, so some or all of your pension that you built up to that point, then the portal where you can get your annual statements, where you can access a retirement modeler. In retirement and partial retirement, you'll also be able to get your P60s and your pay slips. They'll be loaded onto the portal. So that will be your main communication method. There's also a newsletter that's issued. So this is from the administrator regarding any updates to your pension, annual increases that are applied in April each year. So the first time you retire, just take a look at that, because of course when you retire affects the increase that's applied to your pension, and we'll look at that in a moment. So do keep an eye on those coming through so you can see how your benefits are changing each year when they're paid to you. So your pension will be increased every April, and it's based on the Consumer Price Index. So there's a lot of buzz around the month of September, because that is the month that the Consumer Price Index is looked at and used in when increasing your pension. There's a lot of conversations at the moment around how it's affecting state pensions that are in payment. So we'll be using the Consumer Price Index from this month to apply in April. So this makes sure that your pension retains its value over time, so it's not getting degraded by inflation. It keeps up with that cost of living adjustment. So when it comes to pension increases, so this is when it's in payment, there are some reasons why you might not see the full increase on your pension. So that could be your pay date, so it would be when your actual pension's been paid in comparison to when the inflation's applied. It could be your tax code, or it could be if you reach state pension age between the 6th of April 2016 and if you've got a service prior to the 6th of April 97. Now, when we send you your increase letter, it will have information in there for you to have a look at. So as I said a moment ago, please make sure that you do look at that and take that into account. So a question that we get asked a lot, and I can see it has come up a couple of times in the Q&A section already, is if I retire, when I retire, how will that be affected by future increases? So here we've got Mrs. Smith. She retired in October 22. So 6 months prior to the pension increase due on the first Monday after the 6th of April. The pension increase in April 2023 was 10.1%. So because you hadn't been in receipt of a pension for the full year, she'll receive a prorated increase from when she did retire in October 22 up until April 23. So that equates to roughly half of the increase. So she'll receive a 5.05% increase applied to her pension. And then, of course, the next year, as she'd been in receipt of it for a full year, she would then get the Consumer Price Index, the CPI increase for that full year. Now, just to provide you with some information and some resources. So in retirement, although you'll be in receipt of your civil service pension, there's an awful lot available for you should you need the information, or at least so you know it's out there. So the Civil Service Pensioners Alliance, so I knew about them before I started working on the scheme because they're actually very big on social media, LinkedIn, for example. And they've been helping members for over 70 years. So they issue a quarterly magazine, and we do actually get a copy of it. So I had a look through the one that was issued in spring. Some really useful information in there. So articles around what's going on in the world, what's going on in civil service pensions, but also information around discounts that you can get on insurance for high street retailers. So absolutely worth having a look at what they can do for you. You can access free legal guidance. They will signpost you to legal services. And if you've got any queries relating to the civil service scheme, now you're in receipt of a pension, then you can always speak to them. They can stand behind you if you have any queries. Then we have the charity for civil servants. So I was speaking to a representative of theirs at a session that I did a few months ago. And she was telling me that they provide things such as counselling, so not just for you, but for you and any family members. But they're there to provide practical and financial, emotional support, put you in touch with your community, and also so that you know you have people behind you if you do need any support. So do please have a look on their website. We've got the Civil Service Retirement Fellowship, so they also have educational speakers, they have befriending schemes. So do have a look, and you may not need any of their resources right now, but it's just educating yourself so that you know if you are in a position where you need some help, some guidance. I mean, they provide things such as IT courses, then you know that it's there and you know how to get into contact with them. And then we've got the insurance people, so CSIS, so they aim to be the insurance provider of choice for the civil service and public sector people. So they offer a range of services, competitive prices, first class service, and we receive some really good feedback just in passing from people that have dealt with them. So please do have a look on their website. So the intention behind that, as I said, is so you know what resources are available out there. Should you need them or when you need them, then have a look. There's an awful lot of information available. So that's it from me with regards to the presentation. I hope that that has given you some information to help you plan and for arriving at retirement, and that you feel a bit more confident, and that's answered some of the questions. But I'll pass back to Catherine and we'll go through the remaining of your questions.
Thank you, Michelle. That was great. It's nice to see there's lots of support available when retirement does come, if you should need it, that is. So we've got over half an hour left for questions, which is great. We've had lots of questions coming through, so thank you so much for those. We're going to try and get through as many of them as we possibly can, focusing on those that have been upvoted the most. So Liliana will come to you with our first question, which comes from Ben. So he says, I'm in the Classic and Alpha schemes. I plan to take full retirement at 60 and claim my Classic pension. If I do not claim my Alpha pension until state pension age, then will it increase if I am no longer contributing over and above inflation? And is it possible to know how much it would be worth at state pension age? So Liliana, if you could answer that one for us, please.
Yep. So with your Alpha pension, once you leave service and stop accruing Alpha pension, it still does have the cost of living adjustments applied to it. Now, Alpha is based on a Treasury order, so it's just dependent on how inflation is performing at that point. But that factor would still apply every April until you claim the pension. And then once you claim your pension, it is index linked. So I hope that answers that question. And yeah, so that's how it works. Every April, we'll have that cost of living adjustment. And as far as knowing if what it's going to be at state pension age, the value of the pension will remain the same. So the cost of living adjustments are to make sure that your pension does retain its value. So when you leave, you're going to get a statement of what your Alpha pension is, and the number figure will change, but the value won't, because again, that's the whole point of the cost of living adjustment. So in terms of what the actual numbers will be at state pension age, that's the only thing we can't anticipate in advance, is what the cost of living will be year on year. But again, that's why it's important to look at your benefit statements and see how your pension grows, as the years go by as well. So I hope that's helped, and I'll pass it back to Catherine.
Thank you, Liliana. That's great. Yeah, so the only adjustment you would see to your pension in that circumstance would be the cost of living adjustment. Of course, just to factor in that, had you decided to claim the Alpha at 60 alongside the Classic, then of course it would have been paid to you at a lower rate on a reduced basis, because it would have been paid for those 7 additional years. But if you leave it until state pension age, there'll be no reduction applied to it. We'll be provided the annual figure at time of leaving, but it'll have that annual inflation adjustment applied to it. So hopefully that's clear. Our next most upvoted question comes from Anonymous. So this is for you, Michelle. So I understand that pension payments are taxable and lump sums are tax-free. Hence, should I exchange pension for lump sum? The commutation rate, if mentioned, is 1 to 12. So for each £1 of pension you give up, you receive £12 of lump sum. It seems logical to take maximum lump sum to reduce the tax liability. Am I right in my understanding? Michelle, what can you tell us about that, please?
Thank you. Yeah, great question, and something we get asked quite a lot because of course you're trying to ensure that you get the maximum money, that you benefit the most from it. So yes, you can exchange some of your pension for a lump sum. The lump sums are tax-free. Your pension is classed as taxable income. So you would still have the personal allowance threshold, so anything above just over £12,500 at the moment would be taxed. It comes down to your individual circumstances and what you want to do with that lump sum. So we've all worked as a team in pensions for quite a while between us. I won't go in the number of years because then you know our age. But you'd be able to speak to all different people and say, actually, I made a decision because I didn't really look into it and it may not have worked out for me. So it's looking at what's best for you. So if you get that lump sum, what are you going to do to help that last or benefit your whole retirement? We can't give you a crystal ball. We can't ask you to think of how long essentially you're going to be alive for. We can ask you to look at what your retirement planning is going to look like, what you want to do with your money. But I absolutely get your thoughts on why you're looking at that, but also look at what you're going to do with that lump sum if you do take it to benefit for your retirement. Just throwing me in here, I'm terrible when it comes to getting a lump sum. So I know that I wouldn't be able to make that last for my retirement. I'm also a renter, so I'm not going to have a mortgage, so I'm going to consistently be paying rent. So I need to think about my decisions and what I'm doing to maximise my income across retirement. So I understand your thought process, but I'd encourage you to think about what you're going to be doing if you do take the full lump sum to make sure that that lasts your retirement. So it's essentially whatever suits you, but do give it some thinking.
Thanks, Michelle. Yeah, it's a really important point, but it is a very personal choice. There's lots of different factors that, of course, you need to take into account. Some people want to maybe have a lump sum and have that squirreled away, so they've got a bit of a nest egg should they ever need it. I know my parents certainly have kind of gone for that approach. They're both retired. But, you know, I might be thinking, well, I'll take a lump sum when I retire because I want to retire early, and that might maybe see me through until my state pension kicks in. So there's lots of different ways that might be dealt with on an individual level. So it's a really important thing to make sure you think about well ahead of actually retiring, because you need to be able to make that choice quite quickly when the time comes. So you need to have really thought about it in advance. So there's lots to unpick there, and it is a very personal choice. Okay, our next question comes from Chris. This is for you, Liliana, on final salary. So what is your final salary based on? Actual salary at the time of retirement, how much you've earned in the previous 12 months, how is it calculated? Liliana, if you could give us some information on final salary calculations, please.
Yep, so your final salary is not necessarily what you are on your last day of service, though for some people it could be. But what it's actually based on is your pensionable earnings. So there's specific calculations that we perform to get that figure, and that's inclusive of your salary and any pensionable allowances. So going part-time, going forward for your final salary pension, that's not going to, impact your pay because we use the full-time equivalent, and we look back 3 years from your last day of service to get that best pay for Classic, and it's 13 for Premium and Classic Plus. So again, there are specific calculations that we perform to get that, but it's based on your actual earnings for specific 12-month periods or, average of 3 years. So again, very specific calculations, but generally speaking, it's your actual earnings. And again, the last 3 years for Classic, 13 for Premium and Classic Plus. So I hope that helps.
Thanks, Liliana. Yeah, so it can get quite complicated. It's difficult to explain it. There's a follow-on question from somebody else, which is actually the next most upvoted, which says, I know the Classic pension is based on the best 12 months in the last 3 years. I've been told it could also be the highest 3-month period in the last 3 years. Is this the case, please? I think that is a case of some crossed wires out there. So just to clarify, when it comes to the Classic scheme anyway, so this is just for the Classic scheme, it's, as Liliana said, it's the best of the last 3 years. But what we do is we step back every 3 months from your last day of service and look at each 12-month period. So if you're going to retire at the end of December, for example, we'll look from the 1st of January to the 31st of December and see what you earned in that 12-month period. We then step back 3 months, 91 days, so roughly till the end of September. So we then look at what you earned from the 1st of October till the end of September, and then we'd step back another 3 months, and we do that 8 times throughout your last 3 years of service, Whichever 12-month period is the highest, that's what goes into that pension calculation. So I think that might be where that 3 months has come in, just to try and clarify that point a little bit for you. Okay, so hopefully that's helpful. Okay, let's have a look at our next most upvoted question is about the retirement modeler and when will it be updated to show the remedy options. So I'll just quickly pick that up. So that is being worked on at the moment. We're trying to get the retirement modeler so it's ready to include the remedy options for the 7-year remedy period. We don't have an official date as of yet as to when that's going to be available to use, but we're certainly working on getting that up and running as soon as possible. In the interim, until it is ready, the Retirement Benefits Illustrator, or RBI tool, is available on the scheme website, which is designed to give you an indication of the benefits that you might have during that 7-year remedy period if you are impacted. So that's there in the short term until we have the long-term solution available. So we're working to get that available to you as soon as we possibly can, but unfortunately there's no confirmed date for it as of yet. So Michelle, I'll come to you with our next question from Anonymous. I'm in both Classic and Alpha. Can my Classic be enhanced by not taking it at 60 and retiring at my state pension age of 67? Is there an advantage to deferring it? Michelle, what's the situation there, please?
Thank you. Yeah, great question, because of course we've got the differences in the ages, but just referring back to the presentation, when Liliana was talking about late retirement, that's exactly that scenario. So if you don't access your final salary pension at 60, you won't receive any enhancements for you not drawing it then. So if you wanted to keep your ages the same, so not taking Classic at 60 and leaving it to later, it won't be enhanced for late retirement like Alpha, like New Ross would do. It would still be linked to your final salary at the time that you come to take it. And if you did decide that you did want to take it at 60 and carry on working, then of course you would need to look at partial retirement and reducing your earnings by at least 20%. But no, it wouldn't receive any specific enhancements if you didn't access your final salary pension at 60.
Thanks, Michelle. Liliana, come to you with our next one. So when I tell my employer I want to retire, do they kick off the pension quote? So do I have to contact my CSP to do so and then coordinate the actual retirement date between the two? If you could give us a rundown of the retirement process and how that works, please.
Yep. So if you're retiring from active service, your first protocol is to speak with your employer, let them know of your intent to retire and what your last day of service will be. So from active service, your employer will contact my CSP on your behalf. Once we get that request from your employer, we would then, start producing your retirement quotation. So yeah, your employer should facilitate that whole process. Again, all you need to do is initiate it. And then about 2 months prior to your last day of service, you should receive a retirement quotation from my CSP. And then obviously there'll be directions on how to send all of those forms back to us in that pack. Now, for deferred awards, that's a different process. So having a deferred civil service pension means you have a previous service and it's a pension that is paid separately. So deferred or preserved pensions, you do have to request from my CSP yourself. So you can find, it's called the change of address and deferred application form. A bit of a long-winded thing, but it literally is a form on the civil service pension website that you're able to fill out online, submit that to us, let us know when you want to take your pension, and then we'll provide a retirement quotation. So the very short answer is if you're active, your employer will do that process. You just need to engage with them first of all. But obviously, if you have a deferred or a preserved pension, you need to request that specifically using the form that's on the Civil Service Pension website and sending that directly to us. So I hope that's helped, and I'll pass it back to Catherine.
Thank you, Lil. That's great. The next question that we have, I'll just pick up quickly. So does the retirement modeler take into account the reduction for early retirement from the Alpha scheme, or do you have to work this out separately? So it's all included in the retirement modeler. Any reductions that would be applied for taking your pension benefits early are incorporated into the results that you see, so you don't need to work that out separately. So hopefully that's a nice quick answer to that question. Our next question, Michelle, for you comes from Andy. Can I take a lump sum twice? For example, Classic at age 60, if I take my Classic benefits then, and then some Alpha pension converted into lump sum at age 65? Or are there restrictions on taking a lump sum only once? Michelle, what's the story there?
Great, thank you. So the lump sum that you take is connected to the pension that you take, and the maximum that you can have from a defined benefit scheme that's going to be paying you a pension is 25% of the value of that pension. So when we calculate your classic lump sum, it's the maximum that you can have tax-free with regards to your classic pension. And when we calculate your alpha lump sum, it's the maximum you can have connected to your alpha pension. So if you decided to take your classic at 60, yes, you can have the pension and the tax-free lump sum then. And then if you decided to convert some of your alpha pension to a lump sum further down the line, then yes, you can have that tax-free as well. So it's connected to the pension that you are taking. Hopefully that's clarified that for you.
Thank you, Michelle. Yeah, that's great. So you do have the option to take a lump sum twice if you take your pension benefits at different times. I'll quickly pick up our next question, which is, when I take my pension, is the tax deducted at source, or do I have to declare it on a self-assessment form? So tax will be deducted at source when your civil service pension is paid, so it won't need to be declared on a self-assessment tax return unless you're completing that anyway. Just another point that I'll mention there that is a question we sometimes get asked is you never pay national insurance on your pension, even if you're taking it before state pension age. So income tax would be the only deduction. You're never paying national insurance. Liliana, for you, so if our pay rise has not been agreed at the time I send in my partial retirement application, will it be adjusted when it has been agreed? What would happen in that scenario, please?
Yeah, the short answer to that is yes. We get retrospective pay rises quite frequently in the civil service. So what we'll do is we'll do our calculation based on the circumstances we have at that point, so as to not to delay your pension. But about, I want to say 12 weeks after each calculation, we will redo the calculation again to make sure that any retrospective pay rises, any retrospective information gets picked up. And if your figures change, we will revise your award accordingly. So yes, if you've had a pay rise or any kind of contractual change that impacts your service or your pay, we will revise that award accordingly, and obviously be in touch with you. Let us know what your revised figures are. And yeah, you'll be kept in the loop every step of the way. So I hope that's helped. And back to you, Catherine.
Thank you, Lil. That's great. Yeah, any retrospective pay rises and backdated pay awards will always be taken into account. Okay, our next question comes from Karen for you, Michelle. Can you explain what effect contracting out for a long period of time has on the state pension? I have seen there is a reduction to the new state pension for those who were contracted out, but it's not clear what that amount is. Michelle, if you could give us a rundown of how that all works, please.
Thanks for your question, Karen. So historically, pension schemes were what was called contracted out of the state second pension. So the scheme chose it, and members, as being part of the scheme, then defaulted to contracting out. So that meant that you were paying reduced national insurance contributions for that period of time. And that's not just something in relation to the civil service or public sector. That affected any scheme which tended to be final salary schemes that were contracted out. So I've always worked in the private sector, so this also affects me. So because you were paying reduced national insurance contributions, that could affect your state pension because that's calculated on your national insurance contributions. So the new state pension, it says that you have to have paid national insurance contributions equaling up to 35 full years. So it can have an effect on that figure that they're quoting you. So you can look on the government gateway to see your state pension estimate. So I did mine at the start of the year, and it gave me a quote up until the end of the previous tax year. And it said if I carried on paying, then I would reach the full state pension at the moment by a particular period of time. What it means if you don't have the full amount is that the scheme, because that decided to contract out, has to guarantee you will pay you the minimum of what you would have got if you hadn't have been contracted out. So it means that as a scheme, we need to make sure that if there is any essential shortfall, that your civil service pension covers it. But please do go on the government gateway so you can see your information. You can have a look at your history of national insurance contributions right back to when they started, and you can see the impact on that, but it'll be different for each person. The government gateway just needs your national insurance number, and it will allow you to sign in, and you can see information like your tax codes and things on there as well. And it'll give you a long number that you'll just need every time you sign in. But please do go and have a look at that, and then you'll know exactly what you're dealing with.
Thanks, Michelle. That's great. It's a really popular question, and definitely the best advice we can give is just make sure you log on to the government gateway to check your own personal circumstances, as the scenario will be very different from one person to the next. Okay, so a question from Ian now for Liliana. I have applied for partial retirement if I have incorrectly worked my hours out and abatement applies. With my management permission, can I reduce my hours so it doesn't, or will I have to restart the quote process again? How does that work, please?
Yeah, so to avoid abatement, you can either take less pension. So if you've not finalized your pension yet, you can choose to just take some of your pension instead. Or as you say, as long as your employer agrees, you are able to drop your hours further. But if you were to drop your hours further, then they would need to submit a new application with that new job reshape. So as long as your partial retirement hasn't been finalized, we can revise the award accordingly. But again, it would just be your employer to submit that new application to us, and then we would do the calculations for everything based on that job reshape. So the formal application is the CSP 15. So obviously, if anything changes before you put a partial into payment, you can just do that new application on that CSP 15 form. Or again, if you wish, you can just choose to take less pension to avoid abatement. So I hope that has been of use, and pass it back to Catherine.
Thank you, Lil. Something else just worth pointing out there as well. If you didn't pick up the situation at the time that abatement was going to apply, if maybe a month or two later, with your management's permission, you could change your hours, then you could do that. So the abatement might only apply for a month or two. And there's a different form called a CSP 13, which your employer would have to send to civil service pensions, so they could then lift or reduce the abatement on your pension benefits. So that's another scenario that you might go down in that particular situation as well. Okay, so a question from Kevin. For those staff who have already partially retired, is there a pension model or calculator available to enable them to get an updated indication of potential retirement entitlement upon final retirement? Then those members would just use the same retirement modeler as everyone else does. You'll still receive an annual benefit statement, which will just show the pension you've built up since point of partial retirement and any benefits you didn't claim at point of partial retirement. So the modeler that you would use is the same as for all other members. Question for Michelle from Mark. Do you need to take the full period of the remedy under Classic or Alpha, or can you split the 7 years, for example, 4 years in Classic, 3 years in Alpha? Michelle.
Thanks for that question, Mark. So it is for the full years. So you're essentially saying I want to be in my original scheme, so Classic in your example, either up until the 31st of March 2015 or the 31st of March 2022. So you're saying for that full 7-year period, it's one scheme or the other, so you're not able to split it. And the reason for the McLeod judgment is so that everybody's being treated the same and choosing what's best for them. So it'll be the full 7 years in one scheme or the full 7 years in the other scheme. And that's the option A and B that I referenced earlier, and you'll see that on your quotation.
Thanks, Michelle. Liliana, a question for you from Carol, who said, is the WPS refund included in your pension quote? So maybe just a quick run over of what it is first, if you could, please.
Yeah, thank you for your question. So the WPS refund is for those Classic members who are single, divorced, or widowed when they claim their pension. There are some eligibility criteria to get that refund, but generally speaking, Classic members, 1.5% of your contributions went solely towards the spouses and orphans pension. So again, if someone's single, divorced, or widowed, when they leave, they may be entitled to a refund either in full or in part of those contributions that were made. Now, it's not included on the quotation form because we need to know of your eligibility first. So when we send out your retirement quotation, we're going to ask you what your marital status is, and you'll let us know what that is by filling it out. So you'll let us know. You'll return that to us, and then we do the calculation. So that will be paid at finalization stage, not quotation stage, because it is quite literally 1.5% of the contributions that you've made in Classic throughout your career, and that's plus interest. So we add interest to bring it up to current value. And there's also something called a premium deduction that's taken off, because if you do get married after retirement, your spouse would still be eligible for a pension if you were to pass away. So I hope that's been a comprehensive answer, and I hope that's helped.
Thank you, Lil. Yeah, that helps. So yeah, the WPS refund will be included in your pension quote, assuming we've got your up-to-date marital status on your pension record, and that's just a little bit more about how it works and what you would get back. Our questions are jumping around a little bit with all of the votes at the moment, so let's have a look at the next one. So Michelle, it was previously stated that the lump sum is tax-free. What percentage of the pension is tax-free? The sliding scale calculator for lump sums allows you to change the lump sum, but if you take 100%, is that all tax-free, Michelle?
Yeah, great question, and absolutely get why you want to clarify that. So any lump sum that we offer you is the maximum that we are allowed to offer you tax-free. So if it was £50,000 that we've done in our calculation, that would be tax-free. If it was £100,000, it would be tax-free. So that sliding scale is allowing you to say, if I was to take my full lump sum, which would be all tax-free, then how much pension would I need to give up in order to do that? So that's the reason for the sliding scale. You don't have to have a lump sum. You can have the full tax-free lump sum, which is the figure you see on the modeler, and you can have anything in between. So the less lump sum you take, the less your pension needs to reduce by. With regards to how much your pension's taxed, then that is in relation to the personal tax allowance threshold at the time. So anything above 12,500 for your pension income, so what's being paid to you on a regular basis, will be taxed. HMRC would tell us of the tax code to apply for that. So we would do that at source. It's not something you would need to sort out, but anything that we offer you as a lump sum is all tax-free.
Thank you, Michelle. Yeah, there are other types of pension schemes out there that will pay you taxable lump sum. So just in case there's any confusion around that, but in terms of your civil service pension, we'll only pay you tax-free lump sum. We won't give you any of it that is subject to tax. So just worth bearing in mind, if you've got other pension benefits with another provider, then different options might be available for those different type of pension benefits. Okay, a question for Liliana next. If I take Classic at age 59, do I lose 5% irrelevant of when I take it in that final year, or is it prorated? For example, if I take it 6 months before my 60th birthday, do I lose 2.5%? How does that work, please, Lil?
Yeah, so it's approximately 4 to 5% reduction for every year that you take it early. However, the reduction's based on your age in years and complete months. So if you're only taking it partway through the year, the reduction factor for that year is prorated accordingly. So as you say, if you left at 59 years and 6 months old, there would be about a 2.5% reduction to the pension for taking it early. So again, based on your age and years and complete months, prorated if you do leave partway through the year. So I hope that's good news, and I'll pass it back to Catherine.
Thanks, Lil. Yeah, every month older you get, the reduction lessens effectively. So that's always the key thing to remember. I'll quickly pick up on next question, which says, is the pension calculated using full years, or do you include fractions of a year as well? So basically every single day that you work will count towards your pension. So whether that's 35 years and 6 days, 35 years, 307 days, every single day that you work, you will accrue pension benefits for, and that will all count towards your pension. So it's not done on a whole round years, weeks, months, anything like that. Every single extra day will add something to your pension benefits. Question for Michelle next. I'm a dual member, premium and alpha. I'm thinking of taking partial retirement, taking my premium pension, but continuing contribute to my alpha. I think the best time to do this is as soon as you can afford to, because unless your wage increases with CPI, then the final salary part of your pension is being eroded. Is that correct? What are you able to say about that, please, Michelle?
So thank you for your question. So in there, you're saying that you're going to take all of your premium pension. So that will be calculated based on your best salary in a 12-month period over the last 13 years, essentially. But that pension will go up by inflation each year. Your alpha will carry on building up at 2.32% of your salary, and your premium is all being paid to you. Your salary, therefore, is only going to be linked to how you're building it up in alpha, which remember is from the 1st of April to the 31st of March each year, based on your part-time earnings. So that will be going up on that. So you no longer have a final salary pension as it's being paid to you, but that pension that's being paid to you for premium will be going up by inflation each year. So the whole idea around partial retirement is substituting what you're losing from your salary because you're reducing your hours or downgrading, and you're supplementing that with your pension. So you should be earning around the same for that period of time that you're partially retiring. Hopefully that's clarified that for you. Thank you very much for your question.
Thanks, Michelle. Liliana, I'll come to you with our next question, which comes from Pete. He says, I'm in a long-term relationship with my partner. We aren't married or in a civil partnership. Does Classic provide her with a pension if I die, or is she excluded? How does that work, please, Liliana?
Yeah, so with Classic, you do have to be married or in a civil partnership in order for them to gain the pension. So the options exercise that occurred back in the early 2000s gave members the choice to go into Classic Plus or Premium, which would have then provided a non-married partner a pension in the event of your death. But if you've remained in Classic, the Classic rules do state that you indeed have to be married or again in a civil partnership for them to gain the pension. However, if you nominate your partner for the lump sum, they would, of course, still be paid that. But in terms of a continuing pension, it is only marriage and civil partnership for Classic. So I hope that's covered that, and I will pass it back to Catherine.
Thanks, Liliana. Yeah, that's great. So in that scenario, you will have alpha benefits, of course, and your partner is entitled to a pension from that aspect. And if you were to get married or enter into a civil partnership in the future, then pension benefits, even if that was post-retirement, then your partner could benefit from the pension in that scenario as well. So maybe something to think about if that's something that's important to you. Okay, I think that is all of the questions we've got time for today, unfortunately. We've still got about almost 400 questions outstanding, so apologies, we can't get through all of them. There are lots of things that you want to know from us, and we just don't possibly have time to cover all of those, I'm afraid. Thank you so much for attending Pension Awareness Month. We've really enjoyed delivering it. I hope the sessions have been really beneficial to you. There's lots more information out there if you need to know more about your pension. So of course, all of these sessions have been recorded and can be watched back on the dedicated Pension Awareness Month pages of the scheme website. There are other sessions such as Pension Power, partial retirement, pre-retirement seminars, all of which are available to help support you on your pension journey as well. You might also want to consider listening to the Civil Service Pensions podcast, which is available. Season 1 is all available. Season 2 is launching a new episode each week, and you can find that wherever you get your podcasts. If you're someone who, likes me, has a bit of an obsession with podcasts at the moment, so there's lots of useful information. You can listen to that just in a different way than obviously one of these more organised sessions. It's a nice different way to find out a little bit more about your civil service pension, including some real life scenarios from real life civil servants who've been through the retirement process to tell you more about how it works. Please do take some time as well to leave some feedback for all of the Pension Awareness Month sessions. An email will be sent out to you later today. Please tell us what you enjoyed and what you didn't enjoy and what you think we can do better. We will use your feedback to shape the future sessions that we deliver. So all that's left now is for me to say bye, and thank you so much everybody for joining us. We hope you have appreciated these sessions. We've really enjoyed delivering them for you. So thank you very much everyone. Have a great weekend and bye for now.